Hello, dividend growth stock investors. It's Colby the DGI Crab. I am happy to welcome you into the channel here on a Saturday, and I had a viewer, Gerald, who reminded me that it has been a while since I have checked in on the 40 bubble stocks. Gerald happily informed me that he has made a nice little turnaround on a couple of the different bubble stocks based on some earlier videos several months back. Well, we're going to check in on these, take a look at a couple of Gerald's big winners, and let you guys know how these 40 stocks are doing. Now, in case you're new to the channel, DGI Crab focuses entirely on 60 high-quality dividend growth stocks split into 4 separate subcategories or tiers based on the age and time horizon of the investor. Where the younger you are, the lower the yield, the higher the growth is what we're looking for. The older you are, the higher the starting yield, but lower growth is more the emphasis there. So, when I started out, I had more than 250 stocks on a list that I was tracking, and I started whittling that down. And when I got to around 100 stocks left, I thought about starting the channel with a group of 100, right? It sounds like a good, nice, round number, but man, that still seemed like an awful lot. So I continued to whittle that list down, got it down to about 60 before I decided that was as far as I wanted to go. And then this group of 40 were the bubble stocks, the ones that were just outside looking in. And if at any point in time I need to replace one of those 60 stocks, I'm probably going to be grabbing one of the stocks from this group of 40. So we're going to jump in and take a look at that group of 40 stocks, and they are, of course, split into 4 separate age categories or tiers, just like the main group of 60 here on the channel. So this is that Tier 1 bubble stock group. This would be stocks for the 18 to 30-year-old investor, ideally. Not investment advice, just my personal opinion. Do your own due diligence. I'm seeing, no real bargains here. Of all of these stocks, these are sorted by the 4-year average yield in comparison to current day yield. So I'm looking for a bargain on that yield. If the current day yield is 30% or higher above the 4-year average yield, that's usually my buy zone when I want to jump in and start looking to add a position or initiate a position. You'll see with this group of 7 stocks, I don't even have one that's yielding above the 4-year average yield at all, except for SCI, Service Corporation International. This is a really interesting stock, you guys. I see almost no one talking about it. This is the largest funeral services provider in the United States. I think that that's a pretty safe market to be in terms of you're always going to have a customer base. So keep your eye on SCI. It's a really interesting stock and has certainly performed pretty well over the years. Decent dividend growth track record. Hasn't been trading at a great bargain right now. I wouldn't consider it a bargain buy right now, but if you like the idea of having some exposure to the funeral services space, this is one that I would take a good long look at. So as we go into tier 2, this would be a group of stocks most appropriate for the age 31 to 41-year-old investors. We'd be looking at starting yield between 2 to 4% with a growth rate year over year, hopefully in the high single digits, 7 to 9%. In this particular group, we do have a couple of stocks in that buy zone. Brown and Foreman, stock ticker BFB, dividend aristocrat. They've been increasing that dividend year over year like clockwork. It's never been a stock in recent memory that's been a high yielding stock. It's had a long history of yielding down in the 1%, the mid to low 1%. That 4-year average yield continues to climb because the stock has completely cratered in share price. This was a $70 to $80 a share stock just a couple of short years ago, and it has just continued to slide and slide and slide. The makers of Jack Daniel's whiskey, as well as plenty of other recognizable alcohol brands, Man, sales for alcohol sales have been down just across the board. A lot of the stocks in this sector are hurting, but it could be a rebound play, a growth play. 3.3% starting yield's not bad, but I can't imagine Brown and Forman's going to be in any mood to aggressively grow that yield anytime soon. Comcast is also a very intriguing buy. Comcast just seems to fluctuate between $30 and $40 a share. It hasn't really busted out of that range for quite a while right now, but the closer to $30 it gets, the more enticing it is. Comcast is building up a nice track record of dividend increases and yielding above 4% right now. It seems like a pretty safe play. So let me know if there's anything else on this list that you guys are currently buying right now, but those are the main bargain plays, quote unquote, that I see here. As we go into tier three is age 42 to 53. Hopefully, for the people that got off to a good start when they were young and built up a nice portfolio of more dividend growth oriented stocks, when they get to age 42, they're working through their 40s, they can start adding stuff that has a little bit higher, safer, stable starting dividend yield. That's really kind of what this tier is all about to me, because if you've got if you did a great job when you were young and now you're just, in your early to mid 40s and you're kind of finishing off that dividend growth portfolio to finalize your financial freedom, you're just adding stuff that's going to keep growing, but it's just going to be nice and stable. So we're talking about stocks that are going to yield between like 3 and 5% with an average growth rate at around 5%. And that's about what you're looking for, just kind of safe stuff that's not going to rock the boat too much, a little bit higher starting yield just to make sure that you push your way through to financial freedom. If you're just starting out in your 40s and you're starting from ground zero, it's also a nice group of stocks, because now you're just talking about building a nice, a good strong base. You're maybe getting a little bit too late of a start in my estimation to get like the really low yield, like 0.5% to 1% starting yield stuff that's going to grow 10, 12% a year on the yield. Um, that stuff's great when you're young, when you're in your mid 40s, just starting out. No shame in not having a lot of the high growth stuff. You're going to want to kind of play it down the middle at this point. Start getting that yield now, but having a good base of stuff that is going to grow over the long haul, just not as rapidly as some of that tier one stuff. In this group, we've got one stock that's clearly in the buy zone, and that's HTO. And if any of you guys are wondering what the heck is that, this is formerly SJW. They rebranded or renamed to H20 America. Water utility, dividend king, sort of like the kid brother or little brother to me of AWR. Similar in their characteristics as far as that decades long track record of consecutive years of dividend growth. SJW typically yields maybe just a little bit higher than AWR, but the growth rate not quite as impressive. So AWR made my final list in the top 60 stocks for the channel, and it also looks like a very good buy right now. So if you're really into water utilities and maybe you've already established a pretty large position in American States Water and you want to diversify into some other water utilities, don't sleep on H2O, especially because that stock ticker as of this year is new. So make sure that you're paying attention to that. And Prologis in the real estate space, if you're looking to add some REITs, especially to your Roth IRA, which is where I like to add those REITs, where the dividends are not as tax advantageous. That's why I like to put my REITs, my real estate exposure, into the Roth. Prologis certainly starting to look appealing here. I'm probably not going to jump on it quite yet, but if it gets down below $110 a share, I think that's going to be the point when I'm going to have to find some cash to add to the Roth. I still have some Roth investing that I can do for 2025, and I'm always on the lookout for a good deal on the REIT side of things, so we'll see how that goes. And oh, by the way, and then my viewer that emailed me about this, one of the stocks that he pointed out that he had done really well on was UGI. If you look back, I've got a playlist here on the channel for the bubble stocks. Go check it out. If you look at the earlier videos from last year, from several months ago, UGI at one point was at the top of the list here on tier 3. It was trading down in the mid $20 a share. The yield was up in the 6%. So if you were a fan of UGI at the time and had been buying that for $25 a share, let's say, you have gotten almost a 30% share price appreciation return, and you picked up something that had a starting yield on top of that at above 6%. So that's a really nice purchase to get a high starting 6% plus yield and then turn around and look at a 30% share price appreciation. That's what we're trying to accomplish here as dividend value investors, you guys. That's the name of the game. The other one the viewer had done really well on, and gosh, I wish that I had been in on this one as well, because, Lanny over at the Dividend Diplomats was the first person that really turned me on to this stock. And it's sat on my watch list forever, and I wasn't really doing anything with it. And that's eBay. Wow, eBay, when I first started looking at it and on earlier videos, guys, this thing was down in the $40 a share range, like mid 40s. The yield on eBay was up in the high twos. It might have even hit 3%. Oh my gosh. And now it has got shot all the way up to $91. The yield's all the way down to 1.27%. 4-year average 1.78%, and eBay is at like 4 or 5 years of paying out a dividend, but they've increased it every year since they started. And wow, that one just really took off. And shout out to Lanny at the Dividend Diplomats for pointing out eBay. Okay, guys, now finally, bubble tier 4. This is the largest group here, tier 4. Tier 4 is the smallest group of stocks in the main group of 60 on the channel. There's only 10 stocks that are a tier 4 stock. And for the 40 bubble stocks, I mean, gosh, you guys, we're sitting here looking at what I think 13 of these are in the tier 4 range. A lot of REITs, plenty of real estate in this group here. And tier 4, by the way, guys, this is the income seekers. This is 54 and older, trying to push their way to financial freedom. Got to get some higher starting yield in order to get there. So that's kind of what you're looking at here. And a lot of real estate. Once I get up into my 50s, I'm not going to worry as much about qualified dividend income or not. So I'll probably start adding real estate into my brokerage when I get up to that point. Taxes be damned. And at this point, you guys, of the 3 that are in the buy zone, Alexandria Real Estate Equities, Pfizer, and LyondellBasell. Okay, guys, LyondellBasell is a stock that I really like. This is another one, actually. I think Lanny at Dividend Diplomats may have been the first person that turned me on to this one. I can't recall. But gosh, this one just seems like they're going to be cutting their dividend payout ratio at 150%. I don't know, you guys, that yield shot all the way up to 10.5%. I'm used to seeing it at around 6. Not one I follow really closely, but if this was one I was holding in my portfolio, I'd be doing a lot of research as to what the heck's going on there. Is a dividend cut coming? I don't know. Pfizer has been down for a long time now. Its yield is up above 7%. Household name, people know about it, but Pfizer's another one that just worries me a little bit. It's definitely not going to do much dividend growing. I really like Alexandria as a REIT play here. Yield above 6%. The 4-year average is only about 4%. Cash flow, they look like they've got plenty of cash to comfortably continue to cover that dividend. They've got about 15 years of dividend growth history. So definitely a lot to like there. And then Mid-America Apartment Communities, one of my favorite REITs. Not one people talk a lot about, but definitely research this one, you guys. Currently yielding 4.3%. I like it right at about 4.5%. And the growth rate on that yield is usually in the 5 to 7% range. Really nice one, you guys. It was hard picking between this one and Essex Properties for my group of top 60. And Really like this one. Check it out. Let me know what you guys are buying down in the comments below. Did you make any money off the bubble stocks? Let me know.